Kia ora and welcome to the second of our videos in Accounting Basics. This one's going to be focusing on an income statement and what we are requiring for an income statement and the structure that we would like. So this is a question on an income statement for Herman Traders to calculate the profit for the year ending 31st of December 2024. Before we go any further, first thing you have to do is draw a nice little graph that I've already previously drawn for us and lay out what we're trying to do here. Okay. So first things first, we know it's Herman Traders as per this first title. So the first thing we need to do is write a title. So we are going to write income statement. For Herman Traders as at the 31st of December 2024. Okay, so that's our title. That's what we have to do every single time because there's marks associated with just putting in a title, okay? Now we can look down at what we are looking at. So we look down at all our other accounts, and so we've got opening inventory or inventory at the 1st of January, sales, carriage inwards, carriage outwards, rent received, purchase returns, electricity, insurance, interest paid, purchases, sales returns, and wages, okay? And then we've got this little note at the bottom, and this is very vital that we look at this because it gives us more information. So it says inventory at the end of the year was valued at $20,300, okay? So we've got all this information. Now how do we go about creating our income statement? First things first, as always, I'm just going to put this over here so you guys can see all the accounts that we're going to use. The figures are kind of redundant at this stage, but it will help us at the end, okay? So if we look at our accounts, we can go all the way over here, and always we start with an income statement is sales. Sales, okay? And then we look over here at our sales figure, and it's $395,000. Okay? Then we look down there and see, is there any sales returns? And as we can see, just here it says sales returns. So we're going to chuck that down, but we're going to put less before it, sales returns. Very important that we put in sales returns at $4,750. We put it in brackets because we're minusing it off, and we're going to put a solid underline under that. Okay, and then we're going to write net sales. So net sales is going to be the 395 minus the 4,750, okay, which equals 3,902.50. Okay, so that's our net sales, okay. Now we're going to minus off our cost of goods sold, okay. So less, again, cost of goods sold. And we're going to underline this because this is kind of like a title for us. And we always start this with opening inventory. So as we can see, we've got two inventories. We've got inventory at the 31st of December or the 1st of January. So our opening inventory is going to be what we started with. So we're going to go opening inventory. And this is going to go in the second column here because this is working out what cost of goods sold starts with. And this is going to be $76,000. Then we always go purchases next. Okay? And that's going to come to a total of $199,700. okay, which is over here. But what we need to also take into account is purchase returns. So as we did with sales, we need to work out what our net purchases are, okay? So we're going to put this up in this column here, 199,700. And then we're going to less purchase returns. Which we're going to put in brackets again, and that comes to 2,300. Then we're going to underline that because that is our total, and we can write either net purchases if we've got space, which we do in this example. So that's going to be 199,700 minus 2,300, which equals 197,400. Okay,